Hi everyone, a very warm welcome to all our viewers on Money Control. Thank you so much for patiently waiting. But I apologize for the delay. I mean, these are perils of working from home. We were facing some technical difficulty, but now we are here, so we can begin. It's been a very solid week for the Indian markets. If you look at it, just this morning, we saw Nifty scale past a new record high. Earlier this week, BSE hit that $3 trillion market cap mark for the first time ever. So it's been a very eventful week and largely positive week for the Indian markets. And today, if we look at just the session of today's trading day, we saw very phenomenal moves coming in from some heavyweights like Reliance Industries, and of course, there was across the board buying seen from all the sectors. Let's take this market conversation forward. We have with us joining today Mr. Ajay Srivastava from Dimensions. Thank you so much, Mr. Srivastava, for taking time out and joining us this very eventful day for the market.
Thank you very much for having me. Yeah, it's been a wonderful day, absolutely wonderful week, wonderful month, wonderful year. Except for the tragedy of what has unfolded around us, it could have been a spectacular year for everybody. So I think while we celebrate, we need to also commiserate that that this has come around with a lot of misery around for a lot of the people, and we need to sympathize with them. But the fact that the market was resilient, it has rewarded people for investors. I think that's also important because you may have a tragedy, but if you have the money to handle it, take care of your problems, you are far better off. And but as I said, everything comes with a cost and a price. And as we discuss down the line, we will talk about some of those things.
Absolutely. But let's talk about the Aam Aadmi. Like you mentioned, it has been a very testing time for many of us across the country. Either people were directly or indirectly affected by what was happening as part of the second wave of the COVID pandemic. Many people lost their jobs. Many people were ailing from the virus directly. They were staying very cautious, even when it comes to investing their money, participating in the markets directly or indirectly. So, for those who have missed the bus, or for those who sort of missed the rally that we've seen in the recent past, the record highs that the markets have achieved, right now, those who want to enter the markets, is it a good time, or would you advise them to wait by for some more time and perhaps enter at a better level?
See, first of all, I think you should banish the theme called FOMO. There is nothing called you're missed out. Market is beautiful. It gives you a chance to buy again and again the good quality stocks and the themes. Market rotates. Some sectors like metals picked up, metals sold off. In fact, in this week, the worst sector was metal, which was the best sector the previous 1 month or 2 months. Therefore, do not worry. You have not missed anything. Yeah, you got to be patient if you got to write down. So if you missed the metal rally, say 2 weeks, 3 weeks back, market is giving you a chance, may not be at those levels, but still a decent chance to come. And if you missed a sale at 150, the sale is at 120 or 118 or thereabouts. So one thing is market will always give you a chance, so you never missed out an opportunity. The same banking shares which went up this week were in the doghouse till last week. For 1 2 months they were really in the doghouse, like an ICICI bank was struggling at 550, today it is a 650. So one is, never ever panic yourself into buying. That's one point. If you like something, take your time and buy the stock. And even today, as we go forward, I think, as I said, the metals sold off, the commodities sold off, and they have become a little more reasonable than they were perhaps. So you could always now board the bandwagon. Banks have become expensive, so you can stay for some time on it. One, consumer stocks to that extent are a little expensive, but as I've always said, good things come expensive. We know this quarter is going to be a bad quarter for most companies. April, May, June results are
Hmm.
going to be bad. But being forward looking, I think you will get chances to buy whichever sector you choose. And today, I can tell you still, in spite of all the noise going around, and we'll discuss reasons why, metals, which is steel, aluminum, are one of the, and commodities are the best places to put your money, even in the current context.
But for retail investors, especially for those who are just starting out in the market, what is the best way to understand the commodities cycle, how they operate? Because yes, many people, just like yourself, on the street are saying that metals is looking very resilient and it still continues to be a solid play. But what is the best way to ride the metal theme for retail guys?
Karunya, the beauty of Indian market is there are so few players in every sector at the top level. I'm not talking about the smaller caps, etc., which are not there in metal by and large now. So metal, luckily, at least the ferrous, which is a steel and iron, is become like a cement sector. There are only five players in the market at this point of time. So, and you can pick and choose which one you want. If you like a Jindal, or do you like a Tata Steel, or do you like a PSU, like a SAIL. So the good part is investors have very limited options and they can analyze them, they can spread themselves thin. Commodities, we have just three companies in this country on which you can bank commodities. We're talking of NMDC, we're talking of Vedanta, of course, covers all the gamut of commodities, and you have Nalco, really speaking. So, so
Right.
Indian market luckily does not require such a complex study because you have three commodity companies, 4 to 5 steel listed companies at this point of time in the ferrous space. In the non-ferrous space, you have only 2, 3 companies, the Hindalcos of the world and Nalco. So, so even if you make a portfolio, even if it's small investment, you can build a portfolio around steel and commodity in just a choice of 8, 9 companies.
I just noticed that you've not mentioned steel names. You've not singled them out. Are you not as bullish on steel per se?
No, no, I did not single them out for the reason that you can pick and choose by a dartboard. There is no logic to say that, why you should not buy Jindal Steel and Power or JSW. If I say JSW, somebody will argue what about JSPL. The only reason I say is make up your mind whether you want to buy a PSU or a private sector. That's the only distinction. You want to buy a sale, okay, buy a PSU, fine, buy it. But in the private sector, there are actually only three options, really speaking, on steel. There is
Hmm.
no fourth option to buy.
Right. So let's just stick to the to what's happening around us. Stick to the COVID theme, the second wave of the pandemic. Of course, we've seen a significant amount of exuberance, even when things were actually quite bleak in terms of the healthcare infrastructure and how the public was reeling under the virus. But talk to us about now. I mean, Delhi CM has already made it public that they will be calibrated unlocking this week onwards, coming week onwards. There is no clarity what's happening down south yet. There is some expectation of announcements from Maharashtra as well. So, how is it that the institutional community is reading into this? How are they digesting it? And basis of that, I mean, what are you telling your clients how to place their bets?
See, it's like this. First of all, most people have last year's impact is very simple on the portfolios. The people who sold out in panic lost a lot of money off the table. So I think that effect is still lingering on in the market. That's one. The number two is that the kind of liquidity you are sitting in the system with. The RBI is pumping in liquidity. The global liquidity is awash. Markets are awash, and therefore, with the FD rates at 4, 5, 6%, you're forced to enter the market. Now you have two choices. One is lament about the present instance today, what has happened, but also take sustenance for what transpired between the months of November till March when the market rebounded. Now it may not rebound again, but that kind of a gusto, but it will certainly come together. So that extent, the way we analyze the situation is, as I said, April, May, June quarter is going to be a bad quarter. There is no doubt about it. June,
Hmm.
July, August has always been a kind of a mediocre quarter in all the years. So you don't have any too many expectations on that. And even last year comparative results, thanks to last year's lockdown, etc., will not have a bad result. The real trick comes what happens from October onward, because that's a festive season, that's a marriage season, and that's where the
Right.
bets are. And today the bet is that with so much of pent up demand now for 2 years in a running, you could see a very, very explosive demand growth in the quarter of October onward. Now, you want to position today or in 2 months' time is your call. But one thing we know for sure, October onwards, this demand is going to skyrocket.
But what about the pent-up demand that everybody was talking about, mid-year in 2020 when things started unlocking? Especially, we saw exuberance come by in the auto space, and there were enormous amounts of discussions about pent-up demand playing itself out. Do you think there is still more steam?
See, a lot depends upon the government policy. Like what happened in the real estate. The moment Mumbai dropped the registration charges to 2%, the kind of sales in Mumbai just took off like a rocket. Large transaction, 40 crore, 60 crore, 100 crore real estate transaction. So to that extent, if the government is supportive, well, it'll always start with real estate. And if real estate kicks in, you'll find all the sectors follow through, whether it's automobile, whether it is trucks, paints, home improvement, everything. So I think the crux will be what kind of support will the real estate sector get in this one? And I think we
Hmm.
expect a lot more support. And the second most important, remember this, 7 elections next year, government
Right.
under pressure. What do you think should be happening if you're a reasonable person to anticipate a lot of money going into the hand of people? I don't think there is a choice. So you're betting on the 7 elections, concessions on real estate and other things, and lots of money being flooded in those 7 states. If that happens, this demand is there to stay. And I'm quite sure for every political party, please don't take it amiss, survival is more important than economics. So money will be poured into the economy in those 7 states at least.
But let's talk about what's happening right now. We've talked about the markets really surging the past couple of days. But any pockets, any themes that you still think are cheaply valued or attractively valued, which investors can lap up on despite the
I
run
think
up
if you
that has happened?
I think if you ask me, despite the run up, fertilizer sector, extremely, extremely cheap. Now, we know for sure it was a regulated sector, so nobody used to buy the stocks. But for the first time, the government moved. If your readers or listeners remember it, the the subsidy was increased overnight by about 40-50%. It never happened, unprecedented. Given the election year, there'll be more subsidy increases, which is going to come through. And the government did a good part. On March 31st, they released the subsidy amount. So typically, the fertilizer companies to suffer for poor pricing, controlled pricing, and subsidy being held up. Now, all three have come under control at this point of time, and therefore, if you look at the fertilizer sector, valued at 1 to 1.5, 2 times price to book, 5 times PE multiple, extremely, extremely cheap stocks. And most of the fertilizer companies, that's the beauty of it, have half the sales not coming from fertilizers but from industrial chemicals. So, which have done well, industrial chemicals done well, fertilizer has not done well. But with this new subsidy, the fertilizers, the DAPs of the world, and the urea of the world, they'll do phenomenally well. That's one big sector of the economy which is very cheap and I think most underinvested at this point of time.
So fertilizers it is. I've been asking you about, where to place bets, what should new investors do. But I also want to ask where to book profits. I mean, any sectors do you think could start correcting from here on? Is it a good time to sort of profit book as well?
See, the nature of the market has been such that every time you book profit, you come to grief. So I think you'll have a seller's remorse no matter what time you book the profit. I would tend to believe that the chemical space at this point of time is overheated. Some correction is coming in, but not enough. So if you are by and large in the chemical space, I think you reasonably amount should be booking a profit in, because that's one segment overheated, overinvested, and therefore rotation wise, it capital will tend to move out, not go into it. And the reason I say is that there's still a lot of bets being placed on infrastructure sector, the roads, the companies like Siemens, etc., ABB, etc., who will benefit out of the new focus of the government, should it happen, on the infrastructure. So I think you'll see some rotation out of chemicals into other sectors. So one sector which I think is sugar and chemicals, I think it's time to book a little
Hmm.
profit out of those two sectors.
You've talked about how the next one quarter, I mean, the results especially of the next of this quarter will be disappointing and will be on the weaker side. But going forward, where do you think growth lies? Where can people bet on right now, perhaps at better levels, better valuations for, say, the next 1 year or 2 years horizon? Where do you think the fundamentals are intact and which will pick up regardless of what's happening and regardless of the small time impacts and one-off issues that are taking place?
It'll be brave to say regardless of anything happening, so I'm not in that, but I'm just reasonably
But
will
there
tell
are
you one
there
thing.
are certain stocks and certain sectors which they just keep flying. I mean, the exuberance that you saw, despite
Yeah.
when the cases were at the peak, it was shocking almost.
That's why I said you leave too much money and idle men unsupervised in their house, they will buy up stocks. All right. So that's what is happening. So, and I can sincerely say that women are far more prudent investors by and large. And so the men community. I think, one of the sectors which you will see which should get re-rated substantially should be the hotel sector. It should get re-rated
Hmm.
once the markets opens up. It has not gone down too much, or in fact not gone on at all. By and large, two or three Indian stocks of hotel. They have held steady and pretty strong, but I think they will see a re-rating. You know, Karuna, Indian market for not for to just last year, but for a decade or so, maybe 2 decades, have rewarded large company investors much more than small and mid cap. I think that will
Hmm.
continue. That outperformance will continue. So whether we like it or not, the Asian Paints, the Daburs of the world, the Aisha of the world, the Page of the world, they are giving us substantial returns, and I'm talking alpha returns compared to the risk you take in a smaller company. And I'm not saying small companies are bad, but small companies offer you returns in spurts and bursts. Once in 5 years, once in
Right.
3 years, you'll find a bust coming and you'll find going up. These companies have been, really the rock, what you just mentioned, doesn't matter hell, heaven, water, they still go up. And I think there's a reason for that. And the reason is that the economic policy of the government tells us that you need to go with the bigger guy because today's dislocation. If you don't have money in the bank, if you're not surplus, where do you go at the end of the day? So I think you will see that the marquee names, and they are very boring names. Unfortunately, I want to tell an old adage that they tell us in golf that people go for long drives and your coach will tell you, drive for show, but the putting is for dough. People make money by putting. Same is in this market. You want to have excitement, you can go into the stocks with 10-20% every day, but at the end of 3 years you'll find the money was made in the bigger caps, the known names. So I would still say the story is intact. You go for the bigger ones. The one sector which, okay, I have a little different in the market and I will leave it to the people to judge, is banking. I
Hmm.
think banking is looking at down the barrel at this point of time, given the demand compression and technology issues. So you got to be very careful as to where the banking will, as a sector, will go, and that's the worry part to me compared to rest of the market. I think the real economy will be okay. Is the banking sector which
Hmm.
worries me now because there's competition, technology is a big cost and an issue, and if you see the banking industry balance sheets, they don't lend anymore. All they do is to keep the money in government securities or take your money at 4% and keep in a government security at 7% with a 300% basis point margin. So
Right.
I think banking could be one place where we could see underperformance compared to real economy.
What is your sense on certain PSUs, especially a couple of PSU banks which have, started to see some action on the upside? Do you like the PSU space?
I'm going to ask you, Karuna, do you bank with the PSU bank?
Well,
You know,
I actually
uh,
do,
uh,
but not actively. I
so
mean, yeah,
there we go. I go to the street, I go to anywhere. Now, we don't go out anywhere. But earlier, I said, do you bank with the PSU bank? And the answer would be, the point is, they have no reason to exist. They're there for a purpose, is to fund all kind of government schemes. There's no other purpose. They don't serve you. They don't do anything. The market share is going month by
but
month,
some
year on
of
year.
them,
You
like
see what
some of
happens.
them, like an SBI, have done a great job in the retail space, and their penetration is so vast.
You know, yeah, okay. I'll hold the argument. You may be right that SBI perhaps falls in a different bucket. And for the reason it falls in a
Right.
different bucket is not because the bank, but because they managed to create a card subsidiary, they managed to create an insurance company, etc., and so on and so forth. But still, I would see the logic is still the same. That yes, they
Hmm.
have access to government funding, they get all the priority, they hold the treasury chest of the Reserve Bank of India in all states, the network is huge. Put together, look at the market cap of the bank. It's pathetic, absolutely pathetic market cap of the bank. And knowing the bank and knowing what we are looking for in the elections, you will find more and more of the funding portfolio to do it. So every 3 years they clean it up, 2 years they start. So you may be right, SBI could be an outlier, but PSU banks, come on, give me a break. About they don't need to be your investment portfolio. Feel excited. They go up 10-20%. The excitement block that we discussed. Go ahead, do your excitement. But that's not where you want to put your money. If you don't want to bank with it, why would you want to have invested it? Think about it. That's the point I'm making. Rest of the PSU block, cheap as hell still.
Hmm.
It's a re-rated,
Yeah.
dramatically re-rated. But you can't find more cheaper assets than PSU. Even today, BPCL, sitting in a divestment year, it is not even more than two, I think 2.5 times book value. Can you believe the franchise at a book value of 2.5, where everything in the market is at 7 to 8 book value or plus or thereabouts? So value wise, very cheap, give you good dividends
Hmm.
off and on. So, but you got to be patient. They haven't rewarded
Yeah.
investors in a decade, but they might just reward you this time.
We've talked about metals, we've talked about consumption coming back later half of this year, but we've been getting a few comments in the live discussion that we're having right now about auto space. What happens, because while metals is poised to do well, what could be the impact of that on the automobile space, whether it's electric mobility, ancillaries, not tires really, but the ones that heavily rely on metals, from a metal as well as from a consumption standpoint?
See, see the again the good part of auto space is how many two-wheeler companies, four two-wheeler companies in this country. That's all the competition there is about. They will have a bad quarter. April, May, June, if the showrooms are shut, you
Hmm.
can't really buy
Of
the items.
course.
So to that extent, they are bad. But the good part is one of the companies like Bajaj exports 50% of the production. That's good part of it. Is about to launch a scooter, so that extent gets another pipeline. This one. So autos, they will have good quarters and bad quarters, but by and large, they are good quality companies which reward investors as well. So it's just not about the sector; it's also about the nature of companies that you invest in. So whether it's Hero, Eicher of course has the other business of trucks. So to that extent, it is complementary. But these companies have done three good things: they are debt free with enormous cash balances. They have rewarded shareholders very well, top quality governance, and number four, they are like quasi monopolies in the country. So if you got four of these things ticked off, then you are investing in companies which may have a bad quarter, may have even two bad quarters, but unlikely to have a bad 3 year period. It's like somebody told me the other day. It's like auto companies are like these companies like Tendulkar. You know for sure that he may not score a century every year, but at the end of his period, 3 years, he will have an average of 58 or 60 or whatever the number was, right? So therefore, but you got to be patient with them. They have a bad quarter, but they will never see a fall. Also, you'll never find leave aside March 18th last year. You'll never find a Bajaj falling by 30% or 40%. As far as cost is concerned, I think they will be able to pass through the cost to the people. Their efficiencies are good. They will be able to pass through the cost to that extent. I think they have already taken a price increase. So price increase is not a problem. I think the problem is going to be that this quarter and the next quarter till the dislocation happens, they will do. EV is a great theme to feel excited, but if you want to buy EV, you go buy in America, not in India. India is far, far away from EV at this point of time. There are much better companies in the US market to buy EV than in Indian market. So I would say, if you're really looking at EV story, it's in the US, not in India at this time.
One question that a lot of friends and family and a lot of people ask us, even via email, is that, for example, if they have, say, a corpus of 1 lakh rupees and they want to enter the markets right now, what would you tell them? I mean, somebody who is perhaps a millennial and is not very well versed with studying companies, or does not have too much time to sit and sort of trade. What would be the investment strategy that this person should look at across sectors or asset classes? I mean, I'll leave that up to you.
No, see, as I said, in asset classes, I don't know whether most people missed out the best fixed income product is IndiGrid. IndiGrid, when it came out, it went down to almost 90 rupees a unit. They gave a 12 rupee distribution every year. So your yields were upwards of 14, 15, but very few people picked it up. Now it's about 130 and thereabouts. So that extent. So you have a lot of fixed income options. Just now, Power Grid, PSU came up with a similar kind of a product, but I don't know the yield will be 12 or 9 or 10. So if that's one. But if you're a small investor, 1 lakh, 5 lakh, 10 lakh, doesn't matter what you want to
Hmm.
come and invest in at this point of time. I think you got to figure out one thing, that where do you want to invest in, which sector of the market you want to invest. That's the one thing you figure it out. I think rest will follow suit. And the best way to figure it out at this point of time is to look at the sector which you think has the maximum potential. If you think you are the next buyer of a car, go and invest a car. If you think you're next, your colleagues around you, they love liquor and the other license is open, then maybe United Breweries kind of stock is good for you. If you like commodities, you're hearing a story and saying, ultimately every day you read copper has gone up, aluminum has gone up, and so on, then obviously there is only one company, Vedanta, you'll go buy it. So I think simplify your investment thesis by what's happening around you. Don't overanalyze. Believe me, most analysts go wrong more than half the time. So that's you'll not be bad off if you also go wrong. But I think the thesis starts with, if I'm a big consumer of this product, so are my friends, hopefully the sector is doing fine. If you all of you go and buy jockey in the market or you go the friends, then you think Page is doing something right.
Right. And since we're talking about investing and in alternate asset classes, I cannot help but ask you your sense on cryptocurrencies. Is it something that excites you?
Well, of course, it excites everybody. Who's not going to get excited when it falls from 65,000 to
But
30,000? Well,
actively,
that's
would you like to be part of the frenzy?
see. Okay, for people like us, unfortunately, I'll be honest to you, the we have been so uncertain on the regulatory scenario that it is not feasible for us to take a risk in terms of, RBI has come and banned it, income tax gives notices, etc. So I think
Hmm.
large scale investment has been a kind of regulatory risk in this market. You cannot not be part of the story of Bitcoin at the end of the day. If you're a millennial, you have to be part of the story. And as I said, good part, you can buy bits of it, 0.00002%. You can buy Bitcoin for even $1,000, which is 72,000 rupees. I think it's a good story. You got to understand it, play it for what it is supposed to be. I think new ideas, new concepts will take time, will become risky. Now, I cannot be this forum cannot I can't tell you whether Bitcoin is better or Ethereum is better or something else is better. But certainly being there is important. I think it's important to build up your experience there and slowly and steadily buy it at a time when it falls. Do not try to buy it when it goes to 60, 65, or 100,000. As I said, remember I
Hmm.
said there's nothing called you're missing out. You will get it, and people who saw Bitcoin saw it. It was 32,000 day for yesterday when my guy called from the US and said, should we buy? Okay. So you will get a chance. So Bitcoin answer, short answer, yes, you should buy it. And the reason you should buy it is because you got to be part of the new wave of digitals at this point of time. No, the reason, nobody knows the fundamental. Let's be honest. So we are all in the dark. If somebody says he knows fundamental, I'll salute him for that.
Well, on that note, Mr. Srivastava, I'd like to wrap up this conversation. It was a
Thank
pleasure
you.
chatting with you, getting some very interesting and helpful insights for all the viewers who are watching us. Have a great weekend.
Thank you. You too. Have a great weekend.